Let's talk about the real reasons for the trade war between the US and China today. Now, the official reason for the start of the trade war is the large trade deficit that was formed in trade with China. However, the real reason is a little more complicated. Let's start with the fact that before the 2008 crisis, the issue of the trade deficit did not worry Americans at all. First of all, because absolutely all trade with partners was conducted in dollars, and countries that sold more to the US than they bought thus had a surplus of dollars from this surplus. And given that the US had the status of a reliable economy with great opportunities, then this surplus of dollars was reinvested back in the US in government treasury bonds, the stock market, and even in real assets. Therefore, such a circulation of dollars was quite suitable for American high-ranking officials. What changed after 2008? China, which at that time had accumulated a huge amount of gold and foreign exchange reserves in the amount of $3 trillion, began to reduce investments in the US government debt. And instead, these dollars began to invest in a huge number of infrastructure projects in different countries of the world. In addition, the share of the US as China's main trading partner also began to decline, and the share of other continents began to grow. For example, in 2007, Chinese exports to all countries of Africa and South America accounted for only 25% of Chinese exports to the US. Now this share has increased to 60%. And then it became obvious that China is not just reducing its own dependence on the US, and it is turning into a full-fledged world power, which is building a new infrastructure of trade with third world countries, and which can later displace Western companies and later challenge Western countries. The second reason for the trade war is the nature of the trade deficit itself. As you all know, in the pursuit of reducing production costs, many American companies began to transfer production to China. At the same time, the so-called intra-firm trade began to develop. This is when trade takes place between divisions of one TNC in different countries, and this intra-firm trade led to the fact that parts, components, or technologies were exported from the USA to China within one TNC. Then these components were used in China to create a finished product which was later returned to the USA within this company. And since a significant share of added value was formed in countries with lower costs and taxes, this led to the US budget not receiving billions of dollars in taxes, which led to an increase in public debt. In addition, such a transfer of production led to the loss of jobs in high-tech industries. According to various sources, the transfer of production to China led to the loss of 3.2 million jobs in the USA itself. And of these 3 million jobs, 2.5 million falls on the manufacturing sector. Therefore, the decision to increase the duty on imports from China was also supposed to affect this intra-firm trade, that is, to force American multinationals to reformat their internal supply chains and return their production back to the United States. Incidentally, in a similar way, the United States during Trump's last term forced Mexico and Canada to revise the North American Free Trade Agreement. For example, until then, within the framework of this agreement, many global automakers used Mexico as a production site with cheap labor. Cars were manufactured in Mexico and then exported to the United States without duties. And in order to be able to take advantage of NAFTA's duty-free trade, it was necessary to comply with the condition. 62.5% of the cost of a car must be manufactured in North America. In the new agreement, the level of localization has increased to 75%. Also, at the initial stage of negotiations, another requirement was that at least 50% of the cost of a car must be manufactured in the United States. Canada and Mexico categorically disagreed with this requirement. Therefore, a compromise decision was made, according to which 40% of cars should be produced in factories with a salary of at least $16 per hour. In fact, this was done in order to eliminate the wage gap between the USA and Mexico and force automakers to return to the USA. The third reason for the trade war is intellectual property. According to the U.S. Department of Commerce, in 2019, intellectual property created $8 trillion added value. It also provided employment for 48 million citizens and generated over $800 billion in exports. Therefore, Given these data, it is not difficult to assume that the issue of copyright and patent protection is critically important for Americans, and China is the main suspect in this matter, because according to the Commission on the Theft of American Intellectual Property, the losses to the U.S. economy from technology theft are estimated at $300 billion, with China's share ranging from $150 billion to $240 billion. Another problem with technology theft is that competitors use foreign technologies to capture markets that once belonged to Americans. The counterfeit market is also a very important problem. According to the Department of Homeland Security, China's share of the counterfeit goods market is estimated at 88% or $1.2 trillion. The presence of an illegal market leads to huge losses for owners of famous brands. The fourth reason is the dissatisfaction of Americans with the Chinese policy of regulating the market rate of the national currency. More precisely, the Chinese are accused of deliberately maintaining a low rate in order to increase the competitiveness of their goods in foreign markets. This policy is called competitive devaluation, and it consists in the fact that the government deliberately devalues its own currency in order to make exports cheaper compared to foreign competitors. Also, this policy also leads to an increase in the price of imports, which reduces their volumes. And all this leads to asymmetric trade, which causes dissatisfaction with partners. The fifth reason is China's protectionist policy. First, these are high import duties. For example, in recent years, the import duty on cars was 15%, but starting last summer, China increased the duty on 3 separate cars to 40%. Other instruments also cause discontent. Subsidies, restrictions on the export of critical minerals, restrictions on FDI that require technology transfer and joint production with the Chinese, preferences in government procurement for domestic manufacturers, trade financing, and the last reason is the policy of state capitalism in China. Although no one knows the real size of the state sector, according to rough estimates by the State Department, the Chinese government controls 150,000 companies that create from 30 to 50% of the Chinese economy, and the Americans are dissatisfied not so much with the existence of state-owned companies as with the serious state support for these companies. There are many different materials on this topic, but in short, the government actively supports these companies so that they can then displace foreign manufacturers and conquer the market by dumping prices. The state-owned banking sector also plays a very large role in this support, literally flooding these companies with money.